Welcome everyone to not just any Placer AI webinar. I'd like to say it's the Placer AI webinar. It's Retail Trends 2024, and in what has become maybe my favorite tradition, it's RJ Hodivy, our head of analytical research. RJ, thank you so much for joining for what now feels like the fourth year running that we're doing
I
this.
think it's either third or fourth. It's become it's part of the holiday tradition around my family is putting up a tree.
Thanksgiving, Retail Trends webinar, and then Christmas. So
Exactly.
welcome everyone. What we're going to do today is we're going to give you a very brief introduction to Placer. For those of you who are unfamiliar, we're going to dive into our retail trends. And then, as always, we are going to take questions. If you have a question at any point throughout the conversation today, please throw it into the Q&A button. Click on that Q&A button at either the top or bottom of your screen, depending on how you have Zoom configured. And we will try to get to as many questions as possible, either within the course of the conversation or at the end. Introduction. Placer is a location analytics company. That means very simply, people vote with their feet. We show you how they vote across the United States every single day. We do that by looking at a panel of tens of millions of mobile devices. Very critically, this is all aggregate de-identified data, so we are GDPR and CCPA compliant. We then analyze that data with machine learning and AI algorithms in order to make estimations of retail visits across the country and present that data in a wealth of different reports on everything from visits, visit trends, visit frequency, the customer journey, true trade areas, and a whole lot more. If anyone is interested, we do have a free version of our premium product available at placer.ai. And with that, I think we've done just enough to dive into the lessons and the trends for this year. So I want to start looking back before we start really looking ahead. And I want to get, as we are now, it's December 17th, correct? Yeah?
Yeah.
December 17th. I always get confused about dates. There's 2 weeks left, so who knows? Everything could change. But how would you contextualize retail performance in 2023?
Yeah, so this is one of those charts that I love from Placer where, it tells part of the story, but we could go so many more layers deep. I mean, I think everybody see this and say, oh, it was a tough year for retailers. We saw visitation trends decline throughout the year. And while that was true, there was a lot more nuance to it than that just, overall declines. I think we started the year, I think a lot of people forgot that we were lapping Omicron to start the year. So we already had a natural buffer to raise that first quarter numbers. Plus we had a couple big holidays in there too. We had Valentine's Day that helped to do that. We did see some price sensitivity kind of kick in, kind of the April, May timeframe. So it's not a shock that we started to see visitation trends decline, throughout the year. But I think if we looked a little bit more finely, that event-driven aspect really continued through the second quarter as well. We had Easter and Mother's Day that were very strong holidays. It was just the shoulder periods that people were spent taking time off. We did see some softness again in the third quarter, but we also started to see some of the more unique products out there. And I think that 2 themes that I really saw this year were people fixated on value, but not just low prices, getting value in something that you can't get anywhere else, unique products or experiences. And certainly we'll talk a lot about that too. And we started to see a bit of that in the third quarter as well. So while trends may have been down overall, I still think there's a lot of reasons why retailers, particularly those who've kind of pivoted and adjusted to the way consumers are behaving, a lot of reasons for optimism.
Yeah, I mean, I feel the same way. And when you look at like the segments that did very well, we think about off price and we think about discounted dollar, especially within the value perspective. What do you think we learn from their success, and how do you kind of look at the potential for those successes to continue?
Yeah, it's interesting too. It's kind of the idea, if you take away 2 things, the idea that uniqueness and value were the 2 themes that really drove consumer motivation this year. It's interesting too, because I think a lot of that was a byproduct of the pandemic. People were stuck inside for 2 years effectively. We're out and about. People want to reinvent themselves, kind of showcase who they are. And that element of uniqueness, personalization, individualism, whatever you want to call it, really showed through in the beauty category. I think that was more so than anything else. And it's one that you could say, well, it's just all beauty retailers did well, and that's true to some extent. But the retailers that really, diversified the brands they brought in, a wider variety of brands, that cater to a more ethnically diverse audience. I think Ulta did a really good job of that this year. It really shows not just the overall visitation numbers, but also the trade area and who they're pulling in from that. When we look at the consolidated trade area for their stores, it's pretty amazing that it's a lot more diverse, a lot more both ethnically, demographically. So I think that was kind of the first thing. And then if you look kind of the off price, there's certainly that element too. It's not just kind of the standard products that you'd find at other stores. There really is that treasure hunt aspect to it as well that I think, kind of unique and personalized. And so again, it's, value, but it's not just low prices. It's something that, a discounted price, but something I can get, nobody else can get. I'm going to be able to tell a story around this product. So I think that kind of continues with that as well. And then discounted dollar, I mean, again, yeah, that was pretty much low prices, but the ones that outperformed in this category are the ones that added new brands, added new SKUs. And it wasn't just about low prices, it was creating excitement at that low price. So I think, again, just the idea of unique and value is really kind of the common themes that tie together 2023.
Great point. We got a question that said, do you also capture online spending behavior? Is this data primarily football related? The bulk of what we're showing you is obviously football related. There are other data sets that we utilize within our platform, so that we have a partner called Spatial AI that does social demographics data. We have transaction data partners so there's a lot of things that we do see that certainly inform the perspective, but the overwhelming majority is coming from our core data set, and that foundation is coming from our core data set, which is based on mobile traffic data. So now as we get into kind of things that are more trend-esque, let's start with one that I know this was high on your list when we were having our conversation about what we should be including for our 2024 picks. There are a lot of people, there has been a lot of conversation obviously around M&A activity in the grocery space. Do you think it's going to slow down? Do you think it's going to pick up pace? Or do you think we're going to see similar things that we've seen in 2023 and even late 2022 heading into the next year?
I might cheat a little bit with this one because I expect we're going to see the Kroger Albertsons close in 2024, which will automatically make it ahead of 23 in terms of overall activity. But the general question, I do think we're going to continue to see a lot of activity in the space, and really there's a couple of reasons for it. One is that with rising interest rates, people are looking to maximize the return on their stores, and I think a lot of ways that we see that is by consolidating and creating economies of scale with those kind of partnerships and those acquisitions. So I think that's going to be a big part of it, is just because it's more costly to operate a business with higher interest rates, that people are going to need to consolidate. So I think that's kind of one of the things that we're going to see. I think migration, and it's been amazing to me this year how many things can be tied back to the big migration trends that we saw coming out of the pandemic, whether that's people moving from markets like New York, Chicago, San Francisco to Phoenix, Dallas, Houston, Tampa, Orlando, the Carolinas. A lot of that can be explained by migration. And as with such a movement of people in these in population growth, I think all of a sudden, the addressable market in some of these areas have dramatically changed. And so I think this was a big motivation between Aldi's acquisition of Winn-Dixie, the opportunity to go after the South and Southeast market where we did see such a migration push. So we're going to certainly see more of that as well. The last one too, and you see a little bit of here too, is I think that people are realizing that through acquisition, we can target certain demographic or other groups like that. We've seen it a lot. You and I have talked about a lot this year, just the way store formats are changing and how certain retailers like a Meijer in Michigan is going after some of the higher income segments by going to a smaller format store. Well, some of the same principles behind that also apply to the M&A activity. Maybe there's a certain ethnic group or demographic group that you're under indexed to. Maybe an acquisition gets you there too. So I think 2024 is going to go down as a record year for M&A in the grocery space.
Bold prediction. But I think one of our boldest predictions, one of the things that you and I have been very, very excited about, has been this wider retail media trend, specifically within the brick and mortar environment. And that's an important distinction that we do need to make. Retail media is not a new process. It's something that's existed. I go to Amazon.com, I type in rice cooker, it shows me competing rice cookers. Maybe it shows me you could also buy a bag of rice, right? Like that's the concept.
Yeah.
When we think about it in the brick and mortar environment, we're talking about kind of in the store, that evolution of, hey, what if I use this space as the actual media itself and understand the visit slightly differently? What do you think we saw from a progress perspective in 2023? And do you see, depending on that, where do you see us going in 2024?
Yeah, it's not going away. I mean, retail media has not just, it's not just a buzzword either. I think this is the year a lot of firms really started to figure out that this could be a profitable business for them. It could really, as I mentioned, one of the key themes right now is getting a return on your store asset in an environment of higher interest rates. I think this is absolutely one of the ways to do it. And you'd be crazy not to look at, the in-store retail media component. Obviously covered the digital side, but the in-store component, whether it be just digital ads or sampling or other things like that, we're just starting to scratch the surface of what you can do there, and how that can augment and make your store assets more productive. So I think that's going to be super fascinating to watch this year. How these companies are. I felt like this was a year of maturation on that, kind of putting the pieces in place to actually scale the in-store retail media. I feel like that's where we talked to a lot of retailers who were ramping up on that. This is a year where they make it happen now too. We've got the platform in place, we've got the in-store assets, whether video boards or other things like that, to make it happen. Now we just got to fine tune it and make it more effective, through different data sets that we can figure out who's coming into our stores at different times and make it more effective as we go out and try to partner with the right vendors who are going to be advertising with us.
Yeah, I want to double down on this. There's a reason we're very excited about it, and I think it splits into two. And it's one, because the ability of the media advertising to it fits so nicely to fit so nicely with the discovery process, where the idea that the biggest difference between online and offline shopping is online is much more focused and driven towards a specific goal, whereas offline shopping, the likelihood to kind of catch your eye and pull you in on that journey is much larger, which makes the media value potentially bigger, not to mention the overall eyeballs, the duration of visit, etc. But I do think there's two big caveats to this. The big caveats are, do retailers start to figure out answers to the accessibility problem? Because Walmart's going to be fine and Target's going to be fine. But the more media networks there are, the more headache you're giving to the brands that want to reach them. And so if we simplify access to these media networks, you're going to see a big difference. And I
Yep.
think the second piece that's really important is make it brick and mortar focused. Do not get caught up in I don't, if you have to pull out your phone to get the advertising experience, you have
Yep.
missed the point of what's going on. Keep me in the environment that I'm in. Don't make me switch channels in store. I think those are the big caveats. And if those are done, what makes this such an exciting space is that it's all there. There's no massive technological leap that we need to go through in order to make this a reality. This is the difference with the metaverse, blockchain, named the innovative trend du jour of the past few years that kind of fizzled. The technological demand was so significant. Whereas here, most of what we need is already there. It's just solving a few accessibility challenges. I think
Yep.
that's a big reason why we're so excited about this. Moving to the next one. One thing that we've called out quite a bit is the impact that major events and major stars have had on the retail space, everything from Taylor Swift, the Barbie movie, the attention it's brought to retail. How important do you think these interactions are between kind of the world of entertainment and kind of pop stardom and the world of retail? And do you think those relationships are going to be picked up in the next year?
Yeah, I think absolutely. I mean, if you look back at kind of the success stories across retailers and restaurants this year, one of the common themes that we have seen is the ones that have capitalized on celebrity power, influencer, and again, the idea of something unique. I think a lot of it, there's almost this kind of fear of missing out in a lot of cases too with some of these events. If I don't get this product or this particular promotion, I'm going to feel left out. So I think there's a big part of that, and I think that that is really starting to become a major motivator for a lot of consumers in this day and age. I mean, if you think back to McDonald's with its famous orders and, the partnerships they've had with certain designers, last year they had an adult Happy Meal. We've got another one this year. Kerwin, really seeing some really positive visitation numbers on that too. So I think that's going to be a major trend. I worry that some retailers may push it too far and, try to find any celebrity to go along with it too. It really is important to kind of, make it kind of scarce too. You can't just keep promoting and finding new things. You kind of have to have the scarcity as well with it too. But it absolutely has been a motivating factor. I mean, we see it with, visits to Michael's in markets where Taylor Swift was, and, my daughters were didn't get to go to the concert, but certainly we're doing bracelets and things like that. And I can see it in my own house too. So it's amazing to see the influence that these events, and again, a very event-driven focus, very focus on unique, focus on things that you can tell stories about, I think is one of those factors that we see a lot of people grabbing onto this year.
You make a really good point, though. It's definitely something that you're going to see a spread of the tactic, but it
Yep,
doesn't mean you're going to see a pound for pound almost decline in the efficacy of the tactic, because you're going to see people try to
agreed,
utilize it
agreed.
in places where it doesn't fit. Whereas that kind of the discipline necessary to ask, where does this really make sense, and how do I focus my energy and attention in the right places? I do think it's a really big question, because not all opportunities are created equal in these types of instances.
Yeah, we'll know this trend is over when they start asking Place or webinar guests to be an influencer. So
Ah, looking for our retail. What retail would want to partner with us here?
I don't
That'll
know.
be
Well,
that'll be when we're on the chart. That's how we'll know we made it.
yep,
Secondhand retail value overall. I think look, we talk a lot about value, but if we're talking about 2024, we must speak about it as a critical trend.
yep,
I think it's fair to say that value was I mean, you said it was
yeah.
value and uniqueness. So you're saying the two biggest themes. Do you think value maintains that level of importance in the next year? And who do you think benefits if so?
I do. I mean, I think, what could change me and kind of as we head into 24. I mean, inflation's become less of a pressure, but it's still up if you look at all the different categories. I mean, food, yes, is down slightly year over year, but still up compared to where we were pre-pandemic. People are dealing with rent inflation. They're dealing with other healthcare expenses. Interest rates starting to kick in. I think we'll see some impact from that from credit cards as well. So I think it's going to be another year of continued focus on value and people looking to stretch their household budgets, particularly in those shoulder periods, very event driven, and holiday focused. But I think we're also going to see the periods in between people finding ways to get more creative with their household budgets. And, it's interesting too. So with, a lot of the thrift stores and secondhand stores, it's been fascinating to watch these stores, really the popularity and visits to these stores this past year. A lot of it being kind of your younger, professionals that are younger, kind of starters out in the working world are kind of the ones that are gravitating toward it. And I think that's absolutely going to be part of the story, but it's also one that kind of feels that uniqueness. A lot of the products there are things that you're not going to find anywhere else. And I think that's one of those attitudes that we're seeing play out. So I don't think we're going to see a major change in that. I don't think, that there's a lot from an overall macro perspective to say people are going to change their spending patterns overnight. I think you bring up a good point on the last slide about, diminishing returns of some of this stuff, but I think value is still going to remain very much in focus in 24.
Yeah, I mean, that's a great point. I want to touch on two things you brought up, and you mentioned this at the top, that value is not just about chasing the cheapest thing.
Yep.
And I think secondhand is maybe the best example of that, because we again, we've talked about this publicly, and we stole this from Billy Taubman, who told us this on a webinar. But this concept of what happens to luxury if secondhand is very strong. So if I buy $1,000 dress, but I know I can resell that dress for $800, it's no longer $1,000 dress. It's a $200 dress,
Yep.
right? And so that is a change in the way I view the cost of an item. There's also changes in the way I perceive value. And I think one of the things we have talked about a lot this last year, and I think it's equally important next year, if not more important, is that different groups are impacted differently. So there are audiences for whom inflation fundamentally changes their shopping patterns. They must trade down. They have to make the $100 they were looking to spend go further. But there's a lot of audiences that if they're spending 100 or 107, their pattern is not changing at all.
Yeah.
And we need to recognize that there is a large spectrum between them, and that even within those distinct groupings, there are going to be differences based on the way I shop and what I am willing to spend on and not willing to spend on. And in that nuance lives the true understanding of value. So I think sometimes we make the mistake of assuming that value is just about dropping cost,
Yeah.
whereas value is about providing something. Even the concept of affordable luxuries, which we've spoken about ad nauseum this year,
Yeah. No, I mean,
hasn't somehow made the coffee at Starbucks cheaper.
no.
It's just made it all right, I'm not going to spend on that. So now I'm going to give myself this pick me up via coffee.
Yep. Value's got a lot of definitions. I mean, sometimes it is dollar amounts, sometimes it's time saving, sometimes it's having access to unique products that gives me value, that makes it, or access to those products. A lot of ways that people define it, and you're right, not the same for any individual. Everyone's a little bit unique on that.
Yeah, I think it's going to be very interesting. A reminder to please get your questions in. We are, as we work our way here, we want to get to as many of those as possible. Placemaking. This is a concept that, um, again, originally introduced to by the civic audience. So our civic customers who would talk to us about turning their areas, their cities, their communities, their downtown districts into places people want to spend time, with this idea of placemaking. I think it's kind of seep into the world of retail and retail real estate has been very, very significant. How important do you think the placemaking the concept is within retail and retail real estate? And do you think it's going to become even more important in 2024?
I think so. I mean, I think when I see this and kind of the different ways that retailers are finding, creative ways to bring in people for longer time or to spend more, I think it's absolutely critical. And it goes back to what I was saying earlier that, in an environment of higher rates and it's gotten more expensive to actually operate a lot of retail, and you want to maximize the return that you get on a physical store asset. Finding ways to keep people in longer to spend more is absolutely crucial right now. So I think that we're going to continue to see it. I think, this example, 7-Eleven and car wash is a perfect example, but we're seeing it across the board. Different, entertainment, for example, adding new ways to engage with your customer. And not everybody has to be a play or, the gaming type thing at entertainment. There's different levels of experience that you can bring in. So I think that's going to be part of it, and changing the format that you have there. More combination stores, gas station, QSR. We've seen a little bit of 7-Eleven and others on that front. I think it's a big thing is, really maximizing what you can do. And so we talked about retail media, but this is another way, adding new features that people are willing to, pay for or engage with. I think that's going to be a big part as we look to this year ahead. So a lot more creativity when it comes to retail formats that do have a focus on placemaking.
Yeah, I think it's so much about, I mean, there's two levels to this. There's the reason to visit level, which
Yep.
is how do I expand the reasons why you're going to stop at my center? And so things like EV charging and car washes and these have to do things that will get you to spend 30, 40 minutes somewhere that can then extend. And then there's the magnitude of visit question, which is for places that are already succeeding in getting you to come, how do I get you to spend more time? So is it the sitting area near your coffee place? Is it the journey that's going to change that hour-long visit into a 2-hour-long visit, because we know how significant that is for the shopping centers, for the retailers, and how everyone kind of benefits from that rising tide. I think, it's certainly going to be one of the big elements for this coming year. Experiential dining. This is something that we mentioned a little bit. What does experiential mean from your perspective in the dining segment, and why do you think we're going to see more of it?
Yeah, it's been fascinating to watch, quote unquote, experiential dining. And I think it's just, adding new ways to interact with the experience. Again, Korean here is a concept, if you're not familiar. It's a concept where you actually cook the food at your table. It's a little bit like kind of the Japanese places that, where they cook for you. This is where you actually cook it at the table yourself. A little bit like Kura Sushi, where they've got the revolving sushi bar too. Just new ways to interact with the restaurant. And I think that's what we're seeing a lot of, a lot of demand for, both from consumers as well as, retail landlords. There's a lot of interest in doing that because they know these drive. And we've looked at these kind of the experiential dining concepts versus kind of casual dining and full service dining concepts. And they continue to outpace them by a wide margin in terms of visit per location. So some really strong numbers here, and I don't think it's going to go away. It's been fascinating. If we looked at the early part of the pandemic, coming out of the pandemic, it was all the large chains that really captured a lot of the visitation market share coming out of that. And, makes sense because they had the scale to survive. But this last year or so, really about the last 18 months, we saw some of the experiential concepts start to claw back a lot of that, or not a lot, lot, but claw back, some of the market share that, some of the big guys have taken away from them too. So I think we're going to see more and more of it. We're going to see different variations of it. Maybe it's something in terms of the food preparation, maybe more interactive on that point. We will certainly see more different, gaming and, playing game type opportunities, groups like Putt Shack or some of the other ones that are coming out on mini golf and other kind of sports or things like that. We're going to continue to see more and more of that because I think we're seeing a lot of strong results. This is one of the areas where the visitation trends are certainly justifying the investment on these kind of concepts. So, and again, we talked about, being able to target different audiences too. A lot of times this will diversify who's coming into your store location. So I think that's not just about, return on investment too. It's also building a much wider network with your stores with these kind of experiential concepts as well.
That's a good point. A question came in, any data on CPG foods, specialty foods, et cetera, partial grocery, which you covered, product growth online, continuing from the explosive growth when everyone learned to cook. I think the short answer here is the data that we do have access to has all indicated, obviously it's a general trend, so there's things that are happening at either extreme. But overall, food tends to happen in stores, not online. That doesn't mean there's not engagement. That doesn't mean there's not orders. But the general trend that we saw in the grocery space overall has been to purchasing in stores and to shopping in stores. That doesn't mean there aren't things that are more effectively done online. But when we think of the overall spectrum, the starting point there was very low. So pre-pandemic grocery online spending was anywhere between 2 and 4%, depending on which data source you really rely on. Today, we're talking about what, 3 to 5%, according to most. So huge growth. Let's be clear. To go from 2 to 4 to 3 to 5 is a big, significant change, but it's still saying the bulk of it is happening in the locations. And I think that's something that really needs to be considered when we're thinking about those strategies.
I mean, the only thing I'd add to that is that, we do continue to see, if you look at overall visitation trends for grocery as a whole, and I think it's important to separate value grocery from conventional grocery, but if we combine the two, it's still running slightly ahead of where we are in restaurants. So we know people are still cooking at home and interacting that way too. But I also think that, as people, come out of the pandemic and we start to get busy again and return to normal, I think we are going to see, restaurants continue to be, people want to go to restaurants, but right now it's kind of an issue just that sometimes the means aren't there too. But so that trend of people cooking at home and buying things at grocery, either online or in store, that has not gone away. But people are starting to return to normal a bit there too. So I think we've seen some moderation in that trend a bit.
Yeah, absolutely. So a question came in, and then thankfully this individual was kind enough to help me understand the question. What does small scale consolidation look like? And this was referring to our M&A conversation before. How can locally or small businesses utilize this strategy? And it's specifically referring to kind of M&A or those principles within the small business setting. How do you view that, RJ?
Well, we are starting to see consolidation among smaller chains. So if there are people in your market that are very similar, there was, for example, in the Chicago market, Foxtrot and Dom's Market just recently merged and got together. Dom's is only 2 units. Foxtrot was, I think, 30 or 40. So it's interesting to kind of see that we're starting to see some of the small M&A activity take place. So I think that, even if you're a smaller player, there's still are opportunities. And maybe if M&A is not the right answer for you, there's still certainly partnerships. And one of the ways to unlock that potentially is through retail media. We're seeing that, maybe there's, something that a competitor does very well that you don't, or vice versa. There might be a retail media partnership with that too. And so there are ways, even if you don't want to go full-blown M&A or buyout or something like that, there are other ways, partnerships and other things. And it's all unlocked by data too. I think a lot of the data we can bring to the table, or others can bring to the table, can really kind of show you where those complementary opportunities are too. So I think that don't rule out M&A, but there's also ways to explore it without actual outright acquisitions.
That's a great point. I think that idea of partnership is so critical. If I'm Ethan's grocery store and then RJ's, pizzeria opens up in the same shopping center and they have some, pasta dish that they sell there that's absolutely amazing. I'm trying to convince them to create this like home cooked version of it that they would sell out of my store, which for them is here, do a tasting and then buy the meal kit. It's the idea of retail media is just utilizing your space to sell things, and the space to selling the space itself, not just the transactions. And so that concept, I agree with you completely, RJ. I think it has a lot of weight and a lot of ways to be utilized. Another concept that we talked about a lot is this idea of the new normal. Now we're returning kind of to the old normal. We're seeing patterns revert increasingly back and look increasingly more like they did pre-pandemic in terms of when we shop, day of week, time of day, all of that. Why do you think consumer behavior is shifting back to pre-pandemic standards? And what do you think it means for retail?
I think part of it's just an extension of what we've seen, and I know we've talked about return to office and other webinars before, and certainly you can find the white papers and other data we have on the Placer blog about this as well. I think as we've seen, we're not all the way back. We're still only about 60% recovered if we look to return to office visits compared to pre-pandemic. But on a year-over-year basis, we've been averaging about low double-digit growth up until very recently, and then we've kind of dipped into the high single digits. But year-over-year growth, we've seen a lot more people in the offices. And I think as that starts, the work week starts to normalize, then kind of the shopping patterns around it, people have less flexibility on the times they can do it. So you don't see as many, kind of evening after work visits. We don't see as many visits during the day. So some of that's just an extension of return to work. But the other things too is I think some of it is actually driven by the retailers themselves. We've looked at some of these large format experiential grocery concepts as well. I know Trader Joe's and Aldi's have less than that, but overall grocery, we've seen similar trends. And what you'd see is that a lot of it's because they've adapted and become a lot more experiential, and people want to spend more time, and they have more time on the weekends to do it. So I think that's kind of part of it as well. So there's a number of factors there. And I'd be remiss without saying, Trader Joe's and Aldi have done a really good job in that unique value aspect, new SKUs, new flavor profiles. People wait and see what Trader Joe's is launching every month. There's several websites devoted to it. So, there's a lot of things that they're doing right too that help to drive that weekend visit.
Yeah, absolutely. I think there's so much about, I love the idea of value and uniqueness as these two driving themes. A question that came in asked specifically about the behaviors of Instacart and Uber Eats visitors to these kind of grocery pickup channels. I can say thus far, we've done research into it a few times. The assumption, and something we've validated with our retail partners, is it scientific in the same way of other answers? Absolutely not. So take that for granted when we say this. But thus far, we think it's a fairly small percentage of the overall puzzle. That doesn't mean it's not really important. But in terms of overall visits, it's not having such a dramatic effect. And it's difficult to ascertain in terms of a data perspective like ours, what is what. It's something that we do want to tackle in the near future. It is tackleable, but it's just a question of priorities. But it's a great question and one that an issue that we think about quite a bit. The suburban urban opportunity. We talked about this quite a bit, and we thought it was really interesting at all the opportunity that would be available in the suburbs. And by the way, the opportunities that would be available in urban areas as well. So what do you think these shifts and the fact that they have proven themselves out to be significant over time?
I think above all, if you think about it, the trade area that you built a store on pre-pandemic has probably changed quite a bit. And if you're not responding to it, you're already behind the times. I think that's the big thing. I mean, we did see a big movement away from urban centers at the start of the pandemic to suburban and in a lot of cases rural. And you and I have talked about the fact that we're seeing retailers start to follow them and start to build smaller format, start to go to markets that maybe they wouldn't have gone before. These markets that previously were under 100,000 or even in some cases under 50,000 in population, now all of a sudden become pretty attractive because the cost to build out is cheaper, rent cost is usually cheaper, although in some cases that's starting to catch up as well. But you have better access to labor in these markets. So I think that this idea of people moving to smaller markets, I think still holds water. But one of the things I think has not gotten enough attention this year is that we've seen a big resurgence and renaissance in a lot of urban areas. If you look on a year-over-year basis, what market has seen the most absolute population growth? It's New York. And a lot of that is, return to work. It's a lot of the banks and other financial services companies that are bringing people in and then having them come into the office. We see the ripple effect of this all over the place too. So I think your point about there's suburban opportunities, absolutely. There's urban opportunities too, but it's knowing your trade area because that has changed quite a bit. Maybe, you went into a market thinking it was a much more affluent, higher household income type population. A lot of that, they may have shifted to other markets. And so now it may be a younger audience with lower household income, but also a lifetime of potential visitations ahead of them. So those are things that you got to keep in mind, just knowing that your trade area has probably shifted and being able to respond to the audience that is now there, I think is going to be really critical to success in 24.
I think that's such a good point. I think this is one of the things that if you look at so much of the retail news over the last few years, when you think about where stores are being closed, where they're being opened, the primary reason in my mind, and again, so that puts in the necessary reason to understand why that might be wrong, is audience shifts and retailers recognizing that I set up a store in the middle of San Francisco because I was trying to reach audience X. Audience X moved. I don't need this store in San Francisco anymore. By the way, that's a good thing for San Francisco because it means that a spot has opened up for another retailer to reach the audience that is now going to be in San Francisco. And so there is an element of the physical retail world that has to be these longer cycles of being there for an audience. That audience moves, maybe you leave with the audience. Like some of that is going to happen. That's not a bad thing. And it's a very good sign for the retailers who are aware enough to recognize that their audience is shifting.
Yep.
Now we get into some quick hitters. Agility. The idea of pop-ups, short-term retail concepts. Why are they so popular and what is the wider value that they bring to retail overall?
Yeah, I think above all, I mean, it ties back to this idea of unique products. I mean, these Hello Kitty products that you can get through the pop-up stores, you know, they're unique, they're scarce, people are afraid of missing out on them, and they create a lot of buzz. And you know, they drive a lot of visits to location. If you haven't seen how long the lines are, I mean, they can span half the mall in some cases for these pop-up shops. So they've got a draw, and you know, if people are there, they're going to continue to shop in a lot of cases too. So I think that this is important. Now, again, you know, the impact of these as they start to pop up more and more, there may be diminishing returns on that. But at the same time, too, I think that again, the idea that people are looking for uniqueness, you know, I think is certainly going to continue throughout 24. And so I expect to see more kind of creativity and you know, retail formats. So no stopping that down. And you see the numbers here too. When you know the Hello Kitty trucks. I mean, the mall by my house is one too, and it's just amazing to see the traffic at the you know, these kind of pop-up stores.
Yeah, that's my next job is going to be as a Hello Kitty cafe truck driver. But it's I actually the interesting thing here is I think the law of diminishing returns rule that applies to so many retail trends doesn't apply here as much because
Yeah,
of the temporal nature of these pop-ups.
yeah,
So Hello Kitty's only going to have a certain number,
yep,
but the more people who start doing this and embracing this concept, the better it'll be. We were, you know, a concept that we were just discussing recently was where are the sports teams pop-ups when there's imagine if you could run. I was recently at I'm a big Miami Dolphins fan. I was at a Dolphins Commanders game in DC. That stadium was half Dolphins fans. Imagine if you had done like a mini Dolphins pop-up that week in DC, or there was some sort of process for kind of sports teams to engage when their fan bases will be traveling. There's something really interesting about the pop-up concept. It's obviously there's a lot of mechanics and challenges to it. I don't want to, you know, minimize those, but there's something about creating urgency and excitement. And it's not just for the retailers, it's the shopping centers. It's the fact that you have different things going on means you have all these opportunities to poke and prod at new audiences and see, hey, if I draw you in with this thing that you care about, do you stay? Is this actually a place for you that you didn't realize? And now I'm kind of creating that initial draw. I love pop-ups. I love these kind of short-term experiential concepts because I think they're a big win for the consumer. They're a big win for the retailer or brand. And they're a big win for the shopping center owner because they create that urgency and drive. So ultimately, they're a big win for the other retailers. And I think
yep.
that's one of these things of it's a tide that lifts all boats. And I hope we see more people lean into this because I think it's one of those things that the more it happens, the more reasons we give people to make visits, the more likely they are to do so in an extended way.
I agree.
The power of mixed use. We have talked over the years a lot. That's why we didn't make it a big one this year because we've talked about this a bunch, but we
Yep.
love it so much we could not discuss it at all. That kind of drive to mixed uses just feels like it's only picking up pace. Why is it such an important concept in retail real estate right now?
You're right. It's just only starting to pick up pace because I think a lot of people are realizing that the winners right now, if you look at commercial retail real estate, are the ones who've embraced mixed use, and that can take a lot of different forms. That can be, obviously additional apartments or co-working spaces or non-traditional tenants. But yeah, almost every way we've looked at it, whether that just be overall visitation trends, whether that be dwell times, whether it be the visitation trends for the tenants at that property versus their peers, the same stores elsewhere. There's a lot of reasons for it. We see, in most cases, either visitation time up, visit frequency up, or dwell time, or sometimes both. We see, just overall, just where people are pulling from much wider, and the share they're taking from other malls. So I think the idea, and it's not just the fact that, you have people potentially living there, because we do look at, how far people are pulling from this thing. It's not the fact that you've got an apartment complex built on the side of a mall now. It's the idea that you're pulling much more, you're creating new excitement, and not just mixed use too. I want to include the other kind of community engagement, because the operators that we've talked to who are doing different events at the mall, a little bit, it's in conjunction with things like pop-up stores as well. I mean, all these different ways of building excitement and uniqueness and creativity that drive people into the properties right now. And again, it's a win-win for everybody. So I think the idea that I think we're just seeing the results right now. I think people that were early on for a mixed use strategy are really seeing the results, both financially in terms of visitations as well. And now we're starting to see a lot of people try to emulate that too. So I think that's why it's so critical, is because now we're starting to see the success that these operators have had that have embraced mixed use.
That's a great point. And then our final slide. What there's not a lot, not too much left. What do you think? How do you think we're going to look back on this holiday season? How do you think we're going to judge it and analyze it?
I think it's going to end up being a good one. We may be a little bit short of where we were in terms of visitation, and I think on a justice basis, we'll probably be down a little bit year over year. Inflation will probably bring the total spend above where we were, but I think people, if we look back to the themes that we had this year, people were excited around holidays, and I think we did see a little bit of that first slide we showed. We did see that third quarter pressure in terms of overall visitation. We've had some ups and downs in the fourth quarter, but I think as we kind of get into it, people are really responding to deals. I think that was kind of the thing. It was very deal driven consumer. And I think we saw a lot of excitement around Black Friday, certain categories, consumer electronics being one, actually saw a nice pop up there. But I think as we kind of moved in, a little slow to start the December, but as we get closer to the actual holiday events, that's what's going to pick up. And I think we're starting to see that as well. So I think all in all, remember, this is pretty much a very strong holiday, a very deal focused holiday, kind of in the idea of consumers being more focused on value, but one where people still want to, kind of that post-pandemic reemergence, kind of want to, personalize and be creative with it. So there's still excitement around the holiday, and I expect, 23 to be a good one, and hopefully set us off on the right foot for 24.
Yeah, I think the other thing that's going to set us off for 24 is that kind of, we talked about this a little bit, we've done a bunch of research on this in the recent months. Is this like increasing Boxing Day phenomenon in the US, where that immediate period post Christmas, there are major spikes to certain retailers.
Yeah, there are.
And people are coming and they are shopping, and it's gift cards and it's returns and it's a whole lot of factors playing in. But there's a big retail opportunity. The idea that Christmas is somehow the end of the holiday season is absolutely not the case. That final week of December, that early period of January offers a huge opportunity. And with that, a huge thank you, everyone. Thank you for joining us. Thank you for joining so many of these all year. They are a joy to do. We get to have amazing guests, but it's made much more fun by the fact that we know they're appreciated and attended. We hear you from your emails, from the messages you send, from when you come up to us at conferences. It makes it that much more fulfilling and exciting for us. So thank you. Wishing everyone here an absolutely wonderful end of this year and a great start to the next year. RJ, thank you again. I'm already excited for 2024's version of this. Happy holidays. Thank you, everyone. Happy